SoFi stock is up about 1.2% today. You actually have some more really good news for SoFi. We did get some data that came out today, though, that I think has this overall day kind of muted for some of your small cap names. Even though markets are going higher, small caps are the laggers today. So I want to get into this breaking news in regards to SoFi stock, what this analyst just had to say about SoFi. We're going to take a look at the charts, what the data looked like this morning with non-farm payrolls and the unemployment rate, and, well, something to be watching for over this weekend. Hit the like button as well as subscribe to the channel if you find value out of this video, and let's get started. So SoFi stock is up 1.16% today. You did have some good news. This article from Market Insider says SoFi Technologies analysts no longer bullish after stock loses 24% year to date. They mean to say no longer bearish as the stock loses 24% year to date. So that was actually a typo on their part. It says shares of SoFi Technologies were climbing in early trading on Friday amid optimism around its consumer lending business. It says, while concerns remain around the sustainability of the company's earnings and capital over the long term, the 25% decline in the share price year to date and recent capital raise lower the near-term downside risks, according to Keefe, Brunette, and Woods. It says Timothy Switzer upgraded the rating for SoFi Technologies from underperform to market perform, while raising the price target from $6.50 to $7.50. The recent capital raise allows the company SoFi to maintain its balance sheet growth in 2024, Switzer said in an upgrade note. He says, quote, assuming a stable macro environment, SoFi should now be able to maintain its pace of originations, crucial to supporting revenue given the immediate FV mark benefit. For a full year without needing to raise capital or find a meaningful purchaser of its loans, the analyst wrote. Company fundamentals in 2024 are also likely to be supported by improving profitability in the financial services segment and accelerating revenue in the technology segment as new partnerships ramp up, he said. Switzer further stated that the steep decline in the stock so far this year partially limits downside risk. And I think that is correct, right? Markets are always looking at a stock in terms of what are they going to do, not what already happened. So thinking about what already happened for SoFi, which, let's be honest, SoFi has put up some impressive earnings, it doesn't even matter. It's all about what's going to happen. And I think just the way that SoFi has traded this year, along with other small and mid-cap names, interest rate sensitive stocks, it really just comes down to the Fed, right? You went from pricing in 7 rate cuts at one point starting 2024. Now you're pricing in, let's see. Well, you're pricing in the first cut in July. Okay. Well, it's close. Technically still June, but it's very close. The odds today even jumped for a continued pause through June. Odds yesterday of a rate cut in June were 59.4%. Odds today are 50.7%. The odds of a continued pause were 35% yesterday. Now they are 46.9%. So you're borderline pricing in the first rate cut now in July. But point is, you went from pricing in 7 rate cuts. Now, if you look at December's option here or contract for the Fed futures, you're pricing in 1, 2, 3 rate cuts. And you're getting pretty close to only pricing in 2 rate cuts. That's the biggest thing that has negatively affected SoFi this year, as well as small cap and interest rate sensitive names. We had some data come out this morning. You had non-farm payrolls. Here's the deal. So in the last 2 months, you actually didn't see that large of revisions. Over the last 12 months or so, the revisions to the data have gotten large, like 50,000, 100,000 jobs being wiped away. So when we've gotten these jobs reports, they've looked really strong on face value, and then coming by the next month, they're like, no, it was 100,000, less than that. So that's been a little bit of kind of reassurance that the labor market is not overheating, right? You're not likely going to see a wage price spiral, and the economy is maybe not as strong as what we expect. You didn't get really any significant revisions for the last 2 months now. So, I mean, I guess that would support a stronger economy, right? The number today came in at 303,000 job ads for the month of March. The estimate was 200,000. So quick and simple math here, you beat the estimates by almost 34%. That's a very strong number, okay? The unemployment rate was expected to stay at 3.9%. It actually fell back down to 3.8%. Now, why is this good for some areas of the markets and not good for others? Well, it's definitely not putting pressure on the Fed to cut rates anytime soon. That's a little problematic, right, for small cap, mid cap companies, because the longer the Fed waits to cut rates, likely the more damage that gets done to the economy in terms of a recession or not, right? The stronger the economy is, can withstand these rates, inevitably there's going to be cracks in that foundation. Okay, just like if you're an architect and you build a building on a bad foundation, it might hold up for a little while, but it's going to start to crack and it's going to crumble in time. Kind of the same analogy of what's going on here. So the Fed definitely in no rush to start cutting rates following this data report. The positive to that and why the markets are going higher today is, number one, you had a sharp sell-off yesterday, so you were better positioned for a strong number today. But the logic on Wall Street is you can buy the markets. The markets are going to do well because the consumer has a job and they're going to spend money because they are employed. Okay, that means S&P 500 earnings should come in or maybe around expectations, right? The stronger the economy is, more spending, higher EPS you're going to get for the S&P, which today you're sitting at about 21 times next year's earnings. So you're fully valued. You are expensive. So I think upside in the broader markets is limited. And that's why you're seeing big tech really outperforming, because if you have to be allocated in the markets, if you're going to get less rate cuts for interest rate sensitive names, and the Fed's policy tools raising rates are going to continue to have a negative effect on small caps, you likely want to be in your big tech names. And that's why you are seeing big tech really outperforming a lot more than your small cap stocks today. But small caps are still getting a little bit of the bullishness as well. You did have some Fed speakers today. Nothing really came out of that. It was really just status quo across the board. The thing you want to be watching for really over this weekend is this whole Middle East situation. If you just type in here, like let's just Google this together. Iran, Israel news. Like that's literally all you have to do. It says Israel and US believe Iran is about to retaliate for Israeli bombing of Syrian consulate. It says US braces for Iran's response to Israel's Damascus strike. Everyone believes Iran kind of wants to walk a fine line here between, showing they're going to retaliate and, maybe do a little bit of damage, but not enough to spark a all-out war. I don't know how things are going to go, but the markets yesterday, they reacted not to the hawkish Fed comments, but geopolitical tensions. If we do have some kind of strike that mirrors what Israel just did, maybe inside Israel itself, that could stoke more fears about a larger conflict. I've talked about this before, and I'll talk about it again. If you look at the Strait of Hormuz, Hormuz, I'm not exactly sure how to say it. But if you look at this image here, it's actually an interactive image here of the Strait of Hormuz. It by far carries the most oil through it. These are oil tankers, by the way. Iran is right here, right? If they want to try to kind of punish Israel or other, Western countries, that's what they do. They could slow down the flow of oil, and that would have a negative impact on other countries, possibly even help them out by jacking up the price of oil. So there is a financial implication here. If there is a wider conflict, maybe Iran does a little bit too much damage in Israel, and maybe that causes a larger war. Who knows, okay? Not getting into the geopoliticals too much, but you just don't know what's going to happen. The markets don't like uncertainty. Is it going to be something that's bad? Is it not? Nobody really knows. Okay, and that's the problem heading into this weekend. If it is worse than expected, then you could have a larger problem heading into this next upcoming week. But I will say, next week you could have some good news when you get the inflation numbers that will be coming out on Wednesday. You're expecting core to come in at 0.3% month over month. Last month was 0.4%, so a tick down there. Year over year, core expected to come in at 3.7%, down from 3.8% last month. Headline CPI expected as well to fall from 0.4% to 0.3%, and inflation year over year expected to actually rise from 3.2% to 3.4%. So overall, next week you're expecting, not as hot of CPI reports. And based on the data that we got just yesterday with ISM prices paid in the service sector, I mean, this is starting to really collapse, right? And you could kind of track this with CPI, right? Let's see if we can actually do this here. Consumer Price Index. Let's do PCE maybe. Maybe PCE is okay. See, perfect. Awesome chart here. So PCE is in the blue or in the gray, and services prices paid are in the blue. You can see, I mean, they pretty much follow each other, right? Almost perfectly. So what this data really suggested in the month of March is inflation probably going to fall. And that's going to be really good for small caps. That could be really good for a stock like SoFi coming next week. So I think next week could be a little bit more positive than not. But again, we'll have to kind of wait and see. Let me know what you think about that down below in the comment section. As far as SoFi specifically, I think, again, if we get any kind of good news, broad market rally in small caps, SoFi could be vulnerable here to squeeze some of the shorts. You do have almost 20% short interest of free float with $1.44 billion currently in short positions. Cost of borrow fee is about 4.5% today, so there is a decent amount of shorting activity taking place in SoFi. Option activity here on the day today. 2 orders from hedge funds and institutions totaling $140,000 with a positive order value of 0%. Over the past week, you have seen 36 trades in the options market from hedge funds and institutions totaling $2.74 million with a positive order value of 67%. So we will see. SoFi stock is still up about 1%. Really, you're kind of in this just trading zone as long as you stay above about $7.20 per share. If you break under that, then you potentially have a gap to fill these couple days where you gapped up. That could send you back down into the 550 range. If we get good news like I expect next week and nothing crazy happens over the weekend with geopolitical tensions, well, SoFi stock could easily start to make that march again back into the $9 range. So let me know what you think about this down below in the comment section. Hit the like button as well as subscribe to the channel if you learned anything, if you found value or perspective out of this video. Have a fantastic rest of your day, and I will see you in the next one.